Overshadowing President Trump's trip to Japan this week is the worsening trade war between the United States and China. The ongoing dispute between the two superpowers has sent markets into shock, prompting a warning from the IMF of the increasing risks to the global economy. The OECD is warning that a further escalation in the trade dispute could shave 0.7% from global growth by 2021. Trade Minister Simon Birmingham says Australia will respond to any economic uncertainties as they unfold.
In terms of flow of trade in goods in particular, but also potentially in services, there may be windows of opportunity dependent upon how particular trade flows are disrupted through such an escalation of tariffs. Australia has free trade agreements in place with both the United States, struck during the Howard era, as well as with China, struck during this era of a coalition government. And so we would make sure that through those agreements, we seize whatever opportunities are there available to Australia and continue to manage expansion of opportunities elsewhere.
When it comes to Australia's position in the US-China trade war, we walk a very fine line. The Prime Minister raised a few eyebrows during the election campaign when he was asked about China and said, "You stand by your friends, you stand by your customers as well," referring to China as our customers. Indeed, they are one of our biggest customers. But it was showing just how volatile the relationship can be. New data from the Australian National University shows that China might not be buying as much as they used to, which adds to the difficulties. Joining me now live to do a deep dive into this data is lead researcher from the Chinese Investment in Australia database, Susan Travis. Susan, thanks for joining me.
Thank you for having me.
So what does this data show? I know you did a 5-year analysis of the investment that China's making into Australia. I thought it was really interesting that you kind of took a step back and you were looking at what money was coming from China, not just Hong Kong as well.
Yes. So one of the big problems that we have with Chinese investment in a statistical sense is that it doesn't necessarily come straight from China. And the way that we think about foreign investment officially and traditionally is it's foreign if it crosses a border. And the place that it comes from is a place from which it crosses the border. So if dollars come from Singapore to Australia, that is Singaporean investment in Australia. And we know that lots of Chinese investment first goes through Hong Kong, but we don't know much then about what happens. So about 3 years ago, we got into this and trying to make better data to trace the investment back by who the investor is, not necessarily where the funds have come from.
So your data's not showing the rosiest picture. How has investment from China decreased over the last 5 years?
So the data starts in 2014 and our last year is 2018. It goes up and then it goes down, and there's quite a high peak in 2016 and a big proportional drop to 2017 and then to 2018. But I do emphasise that the levels that we're looking at in and of themselves aren't that big. And a 50% drop off $2 is only $1 difference, but a 50% drop off $2,000 is a lot more dollars. So even though it is a big jump proportionally, I would be wary of getting too concerned because we're not dealing with that many dollars to begin with.
And I thought it was interesting when you look at the breakdown of the actual data, there's that huge drop-off in mining, which wouldn't surprise many working in the mining sector in Australia. But there are actually industries where the Chinese investment is going up.
Yes, so manufacturing is one of them that's come out to be, for me at least, a surprise player. I didn't think getting into a Chinese direct investment data set that I'd be looking at a lot of manufacturing investment. But we do have some on the, I think what you'd think of as the higher end of the manufacturing scale. People aren't making shoes or low-cost items here in Australia, which I think is a fairly intuitive outcome. But they are investing in probably the more technical sides of manufacturing in things like vitamin production or medical equipment or things that provide medical services but are not services in and of themselves.
And one really interesting thing I saw was that there's been an increase in the amount of investment in property and real estate in Australia from Chinese investors.
Yes, so real estate's been an interesting one. We get a lot of investment in there, both from big investments. So we have a few very large Chinese developers who purchase, because we only do look at equity, large land acquisitions for large amounts of money, particularly in markets like Sydney and Melbourne in the inner parts. But we also get lots of little investments, and those, while they don't impact the big investment figure that much, do, I think, start to add up, particularly when you're in foreign investment sense small, when you're looking at the sort of 20 to 80 million range. That's still not that big, but those add up.
So what are the actual numbers for the Chinese investment in Australia? How much has it dropped by over 5 years?
First, it started somewhere around 5 billion. I don't have the numbers straight in my head or in front of me. They started about 5 billion, went up to about 15.8, and then dropped about 50% and 50% to end up somewhere around 4.8, I think the number is. But everyone can get them on our website because we do publish them by transaction.
So there has been some concern about these figures this week, that China is abandoning us. Do you think that's what the data shows?
Not necessarily. I think it's a drop over 1 or 2 years, and while I think it's quite interesting, I don't necessarily think it's cause for alarm quite yet. FDI traditionally, although this is a slightly different measure of it, is extremely volatile, partly because of the things that you're purchasing if you're an investor like that. One that I keep talking about in the last week or so has been ports and those big infrastructure investments. Australia just doesn't have that many ports to buy, and Chinese investors are in many of them. There are many of them in JVs and lots of different other structures through which they're making those investments. But nonetheless, if there are no ports of sale, you can't buy any. So as much as we see investment dropping off in some things because they're just structurally spending less, like, as you said before, mining, we're to the end of the investment phase there. So everyone's spending less money in mining, Chinese or otherwise. I think it's also cyclical, just the natural curve and rise and fall of these sorts of things, of which Chinese investors are one player.
Excellent. Fascinating stuff. Thank you so much for joining us.